Good evening, everyone. Welcome to Ask Grit, episode 15. We have Alo with me today here. How are you, Alo?
I'm good, thank you. How are you doing, Naveen?
Very good, very good.
That's good, that's good.
So as always, we bring this program to you every single week. The intention is to discuss all the questions we have had during the week from our investors so that it will add some value to you. So we discuss the questions. We also answer any questions you might have on the fly. If you drop in on the comments on Facebook, we are more than happy to answer it. Let's go, Alo.
Beautiful. So throughout the week, we've gotten some questions from, clients and people that are looking at the property market. A lot of the questions that we've recently been getting is in regards to buying off the plan property. So I've narrowed it down to a few questions that I've personally gotten over the week. The first question is in regards to 1 and 2 part contracts. What are they and what are the differences?
Yeah, so 1 part contract or a single contract is especially for apartments or townhouses where there's only 1 contract. So there'll be a single developer for an apartment project or a townhouse project. There's only 1 contract for you to sign on the property value. Whereas 2 part contracts is when you go for a house and land package. There are 2 parties involved. One is a land developer where you sign a land contract for the land value, and then you sign a building contract with the builder for the build value. So there's 2 contracts on a house and land package. So that is a 2-part contract.
Okay, that makes sense. So why is buying off the plan good?
It can be good or bad, depending on the requirement of the buyer. Say, for example, if someone is ready to go and it's an investor and they want to rent it out straight away, off the plan is not going to work because you have to wait. If your finance is ready, if you want to rent it out, you want a rental income straight away, better to go for established property or a brand new property which you can get a rental income. But you do have some advantages of the plan properties as well. Reason being, say for example, someone has a 10% deposit, but he wants to collect some more money for the next year or 2, and then it makes sense to go for off the plan property by using his 10% deposit and then collect some more money before the settlement. And also another advantage is if you put your 5 or 10% deposit now and wait for another 6 to 12 months based on what you go for, there will be some property appreciation before you settle. So that's another advantage. But it really depends on the investor or the home buyer on what their requirement is. It's good and bad based on your situation.
Okay. I think you touched on it a little bit, actually, answering that previous question. But just so that we can go over it again, how much deposit would you need for an off the plan property?
If it's an apartment or a townhouse, typically it's a 10%. And if it's a house and land, 5% or 10% on the land value, 5% on the construction value.
Okay. Yeah. So because of the long sort of settlement for off the plan properties, what happens if the market changes? Will the contract price and the value of the property change once the contract is signed for an off the plan property or not?
No, once you sign the contract, the price is fixed. The market can change. The market can go up or down, but the price you sign up on will be fixed. The price you sign up on is going to be fixed. If the market has gone up, you'll be in a very good position because by the time you settle, the property value will be much more than what you bought for.
Okay. So speaking of settlements, actually, if somebody wants to sell before settlement, if they want to sell their off the plan property before settlement, are they able to do that?
They cannot sell the property until they settle it, but they have the ability to nominate the property for another buyer. So the main reason someone would want to sell it or take away from them is because if they're not in a position to settle it. So their intention is to take their 10% back. If they cannot settle, the developers can forfeit their deposit. So the only way to overcome that is to find a nominee where they can nominate the property at the same contract price to another buyer.
So in regards to settlement, is the date 100% accurate, the settlement date?
The settlement date is mostly accurate. I would say it's 90% accurate. I mean, if it's an apartment project, something like COVID can delay projects. But apart from that, it's, I would say, 90% accurate, unless they have a major issue like COVID or something like that. But even during COVID, most of the developments we were looking at were pushing through. So so most of the timelines they give is quite accurate. It can be 1 or 2 months delay, but not more than that.
So for those buyers that get to the end of the project, you know, it's completed, but there's some things that they don't like when the project is finished. Is there some sort of warranty period?
Yeah, there's always building warranties. I mean, by law, you have to give 7 years. But structurally, everything will be secured. But say, for example, someone signed up for a property and then they don't like the colors or they don't like the specs or something like that, then it'll be too late. So it's. I mean, we always advise people to go through the specifications. Everything has to be in black and white. Make sure they get the colors they want, choose the colors they want, and so forth, and make sure everything is on paper so that there will not be any surprises on the cosmetics.
Okay. So one question that's very common actually is in regards to the deposit. So, you know, with off the plan properties, apartment, big projects, they do have that 2-year sort of settlement time or whatever it may be. A lot of people want to know, where is their 10% kept? You know, where does it go for 2 years? Does it just sit in the real estate account or?
Yeah, so typically if it's an apartment or townhouse project, it always sits in a lawyer's trust account. It's the lawyer is the vendor's lawyers, vendor's solicitors. Trust account is where all the money is kept. And the buyer will be issued a receipt. And if the developer's lender needs a receipt, they will be issued a receipt too. But it's always the solicitor's trust account, which the money has been kept and it is extremely safe.
Okay. Yeah. So no one can access it, and so if the expected completion time for a project is about 2 years away, and someone has put down the 10% deposit, when's the best time for them to start looking at applying for a loan?
I would say 3 months prior to completion, because typically. But having said that, before they get into the project or sign a contract and pay a deposit, we strongly advise to have a pre-approval in place so that they know that they can borrow that money. But to get the unconditional approval, because the valuations will not be ready until close to the settlement date. So if you get prepared about 3 months before the settlement, I think you have ample time, having some lead time to the banks as well, especially in a situation we are in right now.
Okay.
We have another question from one of the guys. Hello, does the buyer get a compensation if the developers delay the completion? Yes, they do. In terms of if it's a house in construction, it is written on the contract. There will be a dollar amount which will be paid for each and every day which they delay. And that would be the case. If there's a delay, they will be compensated.
Okay. I think you've basically touched on all the questions that we've got here that we've gotten throughout the week. Do we have any more of the?
Yeah, I think we have another one. What does a sunset clause mean, and how does that work in favor of the buyer? Yeah, sunset clauses have been put in mainly by apartment as well as townhouse developers. If it's a massive project of 100+ units, it might take 1.5 to 2 years to build, but developers will put a sunset clause in place, which means typically at least 3 years or 4 years. If developer cannot complete the project on that sunset clause, so let's say 3 years, if the developer has not completed it, buyer has the ability to pull out or cancel the contract. So that's what it means. There has been situations where projects have got delayed due to a variety of reasons, and then the buyers have the ability to cancel the contract because it has exceeded the sunset clause. Yeah, there's few more. Is the warranty the same for the townhouses as well? Yes, that's correct. So by law, you need to give 7 years by each and every builder, and that will be the case for townhouses as well. Does overseas investors get FIRB fee waived off if it's an apartment project? It's not always the case. FIRB fee is payable by each and every foreign buyer, but having said that, there are some developers who would give it as an incentive to pay the FIRB fees. So there are certain projects, even we are working on some of the developers, they are willing to waive off or pay the FIRB fees of $6,350 if it's below $1 million on behalf of the purchasers. So it really depends on the project and the developer.
Yeah.
Interesting questions. So another one coming in. Even if you buy in Canberra, do you still have to pay FIRB fees? The short answer is yes, although Canberra is the capital city and that's where all the government offices are, you still have to pay it. But you do have benefits in terms of stamp duty in Canberra. You only pay 2.1% as opposed to 5% for local or 13% for foreigner on the other states.
Wow, good saving.
All right, sounds like that's about it. Thank you so much for listening in. We'll be bringing on to you a few more questions next week. Might be a brand new topic, but we try to focus on a particular topic so that it will be focused and we can bring on these questions for you and it will add value to you. Thanks for listening.
Thank you.